Okay, good morning, folks. Good afternoon, good evening, depending, of course, on where you are in the world. Beautiful sunny day here in London today. Thanks for tuning in. For those that don't know me, my name is Andrew Lockwood, and I am the head coach and trader here at Forex Signals. Our partnering broker here, Eightcap, have kindly welcomed me to be your guest analyst for the month of May, and I'm really enjoying the interaction. So what I'm going to basically do is talk a little bit about what happened last week in the markets, a little bit about what should be happening this week in the markets. I'm going to talk to you a little bit about my two real trading strategies, how I attack the markets, and then we'll jump onto the charts as well and look at for any potential trading opportunities. Also, I want to talk to you a little bit about a technique that if you are struggling in the markets, how I think you can improve your risk, not your risk, how you can improve your win-loss ratio. I know a lot of you sometimes are struggling with that. You have your winners and then you have your losers, and it's just hard to see the. Let me just turn off my colleague. Just come on streaming. We do stream live around the clock here at Forex Signals. I'm just going to turn him down. There you go. We love to hear our colleagues streaming, but there we go. So basically, he's just come on now. We stream like 6 times a day here in our trading room, talking about markets and so forth. He's just come on now at the same time. I'll talk to you about the technique that I think you should be using to improve your win to loss ratio. Okay, let's get straight into it. Last week, big fundamental week last week. For those of you that have been following the markets, we had some central bank rate decisions, some key decisions out of Australia, out of the UK, out of the US as well. Also, we had non-farm payroll out last week. So a really big week. The Australians moved their interest rates much more than expected. They were going for just a 15 basis point rise. They actually put it on a 0.25% basis point rise. So the Australian dollar initially caught a bit of a bid here. You can see it on my momentum meter. This is the orange line. This orange line basically tells us where the particular currency is going. So you can see here when it happened last week, the Australian dollar caught a big bid, and now since then we've seen some profit taking come out of it. Then we had the FOMC early on, I'll say midweek. The FOMC, that's the Federal Open Market Committee. That's basically the Fed interest rates. They moved their basis, their benchmark by 50 basis points. Now, that was pretty much priced into the market. 50 basis points was what was expected. Often when you look at these fundamental news events, if it comes out a deviation from what's expected, that's normally what happens. That's normally what drives some of the markets and the volatility. Came in as expected. However, the analysts and some of the traders out there that we were talking to, some of them were expecting a more aggressive approach from the Fed. Some of them are talking about 75 basis point rise. Some are even talking up a whole point basis point rise. Well, they in fact disappointed the markets, and you saw just the 50 basis point rise. You see here the dollar, follow my crosshairs here or follow my mouse, the dollar came under pressure with the rate hike, basically thinking that's now more of a dovish stance that the Fed are going to be taking. Short-lived, or with that fall back in dollar and fall back in yields, you saw the stock market put on around 6 or 7% in a day. Again, short-lived. That basically retraced pretty much the next day. Now you'll see here on the momentum meter, the dollar is the strongest currency. And lastly, the other central bank we had was the Bank of England. So the Bank of England, they also moved their interest rates by a 0.25 basis point rise, and the pound hasn't liked it. Pound hasn't liked it at all. The pound is crumbling at the moment against the US dollar, hitting some big lows down at 122. We'll look at the charts in a moment. So the pound basically was disappointed with their rate hikes. The reason why they're disappointed wasn't because of that hike. Normally, as a trend, if you're trading the fundamentals and economies are hiking their rates, normally that's good for an economy, good for the currency. But the problem is with the pound is that the Bank of England are basically talking about the potential for negative growth now for the rest of this year and beyond. and also talking about potentially having inflation hit double digits. I mean, they're talking about inflation maybe hitting up at 10%. We know that global inflation is huge. It's soaring in all the developed worlds. And of course, the UK is no exception. Double digits inflation, that's pretty dangerous. Problem is, when you have double digits, double digit inflation, and you have an economy that's basically, not growing, basically contracting, that can lead to a situation called stagflation, which is not a good place to be in. So there's concerns in there at the moment. That's why the British pound is coming lower. That's why UK stocks are trading lower as well. Then we had non-farm payroll on Friday. Non-farm payroll came in pretty much in line. It's still showing an economy which is pretty much at full employment, which again is inflationary. So that again saw some increase in US yields. Just talking about US yields. Well, before I get on to US yields, let me talk about this momentum meter. For those of you that followed me last week, you would have seen this. I don't know why or how anyone can trade the Forex markets without looking at the momentum meter. Basically, it tells me at this moment in time which currencies are strong and which currencies are weak. Now, it doesn't, unfortunately, as I always say, it doesn't predict the future, but it does give me a good overview to where I should be focusing my trading activities at that current time. Now, clearly, if I'm a trend follower, which I do intraday, that's my technique for intraday trading on the lower time frame charts, on the not so much the 15 these days, but 15, say 1 hour, 4 hour charts. I like to follow trends. Well, I want to be buying the currencies that are strong, and I want to be selling the currencies that are weak. Trading currencies is two-dimensional. You've got one currency pitched against the other, one economy pitched against the other. Not like just buying Apple shares or buying, Bitcoin or so. You're buying one currency against selling another. So as a trend follower, to get me the edge, and all trading is about is having a slight edge and exploiting that edge. To get that edge, I want to be buying the strong and selling the weak. And you'll see here on the momentum meter, I've got this set here at the moment on the 4 hour chart. You see the color coding down here. By the way, you can access this as well. If you wanted to head over to our site, you can check it out. Doesn't cost you a dime. If you want to stay for a week, play with it, see if it improves your trading. Just head over to forexsignals.com. I think we've got a half price offer for you as well there. Play it out, play with it. Here you'll see the color coding down the left here. So the green line, I actually colored mine green because of the greenback. The dollar is the strongest currency at the moment. That's just the way it is. We're on 20-year highs against the yen. We're on 6-year highs against the major other currencies, the euro and the like. So dollar is strong. Dollar is continuing to be a strong currency. But what's interesting here, I think, and something that you maybe should be looking at this week, is this blue line here. This is the euro. The most actively traded currency pair on the planet is the euro against the dollar. Okay, that accounts for, I think, is about 30% of all FX trader activity is in the euro against the dollar. Okay, so it stands to reason that if the dollar gets strong, the euro tends to get weak. That's just the way it is, because obviously to buy the dollar, people have to sell the euro. 30% of activity goes through that currency pair. But what you're seeing at the moment is a strong euro. So you're seeing a strong dollar and a strong euro. So that doesn't necessarily mean there's a really good edge in looking at the euro dollar. This shows to me there's a potential edge this week in looking at the euro strength, but looking at these currencies as a potential weakness. So, of course, we've got the pound weak at the moment. This is the 4 hour chart. If I drag that out to the daily, you'll see here, down here, the white line. That is the pound. So the pound is the weakest currency on the basket of 8. Okay, you've got the euro up here on the daily. You've got the dollar up, of course, on the daily as well. But you're seeing weakness in these currency pairs. So maybe your edge this week is in something like buying the euro against the British pound. There's an edge there. You've got strong currency against the weak currency. We'll look at that in a moment when we jump onto the charts. But also you've got the Swiss franc. It's a softer currency at the moment. It's a low yielding currency. It's trading to the downside. So euro against the Swiss, maybe we'll have an edge this week as well, and we'll look at that. Just going back to the 4 hour, I like to use the 4 hour because it gives me I can see pretty much everything on the 4 hour. I can see some weakness coming in to the Australian dollar. So buying the euro, selling the Australian dollar may have an edge. Now, you don't just take that as a punt and take that as a trade. You need to have a defined strategy, defining your entry rules and defining your exit rules. You don't just want to be jumping in because I've said it here on a once a week live event with you. You need to apply a trading strategy, of which I do have, and we do teach. But euro against the Oz may be another one you may want to look at. And also another thing you might want to look at is the yen. Okay, so if you look here at well, this gives you a good indication, folks, why these currencies are where they are at the moment. These are global yields. These are the 10-year bond yields. Okay, you've got all these currencies up here at the moment that are basically having their yields push up. Look at the US 10-year now up at 3.14. You look at the euro. Look at the euro. The euro basically depicted here with the purple line. DE is actually the German Bund. That had yields less than the Japanese yen for pretty much all of last year. Now, from maybe last month, the euro yields have overtaken the Japanese government bond yields. That's why you're seeing the strength coming in to the euro at the moment. Euro yields up at 1.3. Remember, the Eurozone are the one central bank that haven't actually moved interest rates at the moment, apart from the yen, of course. But all the others, New Zealand, Australia, US, Canada, pound, they've all moved their interest rate. They've all started their interest rate hike cycle. The euro hasn't. They are likely to be the next on the card, which is why you're most likely to see some positioning in stronger euro. And that's exactly what is happened at the moment. Okay, so that's basically where we are at the moment. You're seeing that. So I'm going to go around and look at the charts in a moment to look at those ones in particular. I know I've only got a short period of time here. Before we do that, let's have a quick look about the economic calendar for the week ahead, because obviously we need to know what's coming out this week. Now, historically, once you have a non-farm payroll and you have the Fed decision, normally the following week is a bit light on economic news, and it is light this week as well. We're not seeing a great deal out. I will just scan through here at the moment. Now we've got our own one here at Forex Signals. We take a feed from another supplier. If you are not on the Forex Signals site, you can get that actually on the free landing page. But if you want to go to Forex Factory, I've always used Forex Factory. Of course, we've got our own now as well, but Forex Factory is great for this. It basically tells you what news events are coming out this week. Even if you're not trading the news, I do think it's important that you do follow these news events. The last thing you want to be doing is taking a trade long-term or short-term just ahead of a big announcement, inflation numbers or something like that, because spreads widen for one thing. And if you're using tight stops, you could get stopped out before even the market moves, because spreads sometimes widen over these news events. And also volatility kicks in as well. You could end up getting stopped out before you even start. So let's have a look here. So Monday, not a lot color coded here. Anything in anything in red is deemed high impact. Anything in yellow is low impact. Anything in sort of orange here, you can see, is medium impact, and that's the MPC Saunders speaking later today in the UK. Of course, depending on where you are in the world, just go up to the clock up here and make sure you change it to your local setting. I think you have to do that manually. I've obviously here in the UK, so I'm actually that's at 8:17. It should be at 9:17. Clocks haven't changed there, so I'll change that to my local time here, which is BST now, British Summer Time here in the UK. So nothing out really today of note apart from that Bank of England speaker. Wednesday we've got some OPEC meeting. Okay, that's very we need to be paying attention to that, of course, with oil prices the way they are at the moment. Now it looks as though that the Eurozone are sort of collaborating together to maybe stop buying using Russian oil. So we'll see how they react to that. Then, of course, you've got the other side of that. I was just chatting to our production manager off camera here a moment ago about how the Saudis may start upping the ante here as well with the OPEC. So important OPEC decision for oil prices. So pay attention to that. We've also got US CPI coming in at month on month up 4%, which is almost I think it's about that's just over 7% year on year. Again, central bankers are plagued with inflation at the moment. CPI is inflation, Consumer Price Index. So keep an eye on that. If that's going to beat expectations by much, then you may see, again, bond yields push up higher. And if bond yields push up higher, then you're likely to see the US dollar push up higher as well. As I say, pretty quiet week. You've got PPI in the US as well, producer prices. Producer price index up 0.5% year on year on the month. That's basically how much producers have to pay for their raw materials, which filters through into inflation. Again, there's a big supply price squeeze at the moment, so we're expecting to see some quite strong numbers there. Say quite a quiet week. We've got the Aussie. That's next Monday actually. So that's basically next week's numbers. And next week I'll be doing this live event from my villa in Thailand. So looking forward to that. I have a different backdrop than my interactive touchscreen behind. Well, maybe have my pool if I can stream from there. Looking forward to that next week. So that's basically the economic calendar for the week ahead. Right, I'm just going to have a quick exercise I want you to maybe think about when you are trading. Now, I've used this with my traders for many years. It really does help in your win-loss ratio. If you're struggling, if you're around there at 50% or 40%, and that doesn't necessarily mean you're losing money, but if you want to increase your win-to-loss ratio, I really think it's important that you maybe look at doing this little exercise. Now, I do this every Sunday before the trading week. I'll clear the charts. I'll put the trading view charts up here. It's basically plotting in the key levels of support and resistance. Simple as that on the daily chart. Weekly there as well, but weekly, you don't. They don't change that often. But doing this on the daily chart. Now, as traders, we always need to have a reason to get into the trade. But equally, we need to know where to get out of the trade. And there's no point getting into the trade unless we've got an exit strategy, profit targets. I know some of you may be trading as well, but I personally like to take static profit targets until I reach a certain percentage on the month. And basically having these supply and demand zones, support and resistance zones, basically mapped in and not taking trades through these key levels can really help win-loss ratio improvement. Okay, now it's really difficult as traders. You see a perfect setup on your strategy. It's a perfect pullback into a demand zone, and you've got maybe a 380R profit target. If your profit target is through this level of resistance, you don't take the trade. Really hard not to do that. Really hard, especially when you see a vanilla setup, not to take the trade through those key levels. That's one of the biggest challenges that many traders face is basically is the compulsion to always be in a trade, because after all, they've told their spouse that they're a trader. Yeah, they're a trader. They're sitting in front of their man caves for 10 hours a day and they're working. Yes, you've always got to be in the trade to make money. Well, if you're trading the higher time frame charts, even the lower time frame charts, plotting these levels in really important. And I always do this on the line chart, on the daily chart. This is the weekly at the moment on the dollar index. Just while we're on this screen, you can see we're at a big level dollar index just broken through. So there's pretty much blue sky now for the dollar index, DXY. Right, let's have a quick look then. So we can put that down to the daily chart, okay? And we just basically say, for example, we're going to do some analysis on the euro against the Swiss, because we mentioned that a moment ago as the dollar is as the euro is getting stronger at the moment. So I always do this, and you can see I've done some here. I'm going to go out to the daily chart. The way to do this is by going to the line chart. Okay, so we go to the line chart and we basically plot our levels on those big A's or those big V's. Any of those big moves, those are our levels. And we just don't trade if our profit target is through these levels. Now you can color code for different if you want to do the weekly, you might want to do a different color. I'm just going to make that make them all green. So plotting here, I think we've got definitely a line here. Anything that's big move. So for example, now we are 10 pips away from a big level of resistance that was respected last week. It might break. These levels are not insurmountable levels, clearly. Yeah, I'm going to stick it in there. Right, these levels are not insurmountable levels. Of course they break, otherwise there'd never be trends. They are, they're there to be broken. But for a win to loss ratio, I've got a 10 pips now before I've got big resistance. If I've got a little pullback here and I need to take my profit target through this level, I'm not going to take the trade. Too much resistance coming in. Just take it. Find something else. Just find another little setup. So and then you can go back to the this is the daily now. Go back to the candlestick chart, and of course, then you can put on the candles, and things become a little bit clearer in the way. Let's just pick another one. New Zealand against the Swiss. I've never traded this currency pair, I don't think. I'm not actually a big fan of trading the New Zealand currency in CFDs because of the sometimes the spreads can widen out quite aggressively. So go to the daily, go to the line chart, and just put in the key levels. Just look at that one. I mean, this level here, if we ever get down there, I'm pretty sure if we get down there that we are going to see support coming in at 62.50, about 50 pips from here at the moment. I'm not going to take trades through there if my profit targets are down here. I'll wait to see if it's respected. Wait for the next one. I know it sounds like I'm just giving the excuses here not to trade. Well, that's often quite a good bit of advice. Trading less is often better than trading, trading more. I know it's difficult because we're bred to believe that the more hours you put in, then the more money you should be getting paid in this, in life. But that's not necessarily the case when it comes to trading. Often, the less hours you put in, the more profitable you will be. So, put in your line charts. I do this on the Sunday, I do that on the line chart. Do this on a Sunday, and just be careful. Now, you don't need to be placing so many in there that you don't do anything. Of course, that's a problem in itself. Paralysis from analysis. But the key levels, and do that exercise. As I say, once a week on a Sunday. And it's a good idea to do it on a Sunday, so you don't do forward bias. So you don't just forward biases when you're on the live charts and you put them into to suit your trading. Do them in the week beforehand when there's no sort of emotions going on. Right, let's have a quick look then at some of these. I did want to talk to you about my two main strategies. I know I'm short for time here, but I'll just push through this quickly. One of my main strategies for intraday is basically getting into the trend. I get into the trend, usually speaking, on a pullback. I never want to buy the top of a candle or the top of a trend or sell the bottom. I like to use a pullback, but I don't know when a pullback is happening, if indeed it is a pullback or if indeed it's going to be a reversal. We don't know that, yeah? We don't know. So you've got the trend coming down. Is that a pullback? Yeah. Or is it going to be a reversal and carrying all the way back on itself? Well, I don't know. But what I do use is simple price action in terms of candlesticks to give me a bit of an edge, a bit of a clue. If I see the pullback with that red candle there, and then, with the green candle there, green candle, bullish pullback, and then they have the next candle fully engulfing the previous candle, that is an indication that indeed was a pullback and the trend continuation is in play. So I use simple price action. That's a bearish engulfer. I also use these pin bars as well. Very simple pin bar. That shows you here that the buyers are pulling back, and that's showing you that this could be a pullback or reversal. And then the sellers come back in and take it lower. We close lower. And of course, that is a bearish pattern as well. So you're seeing that in the direction of the trend is very powerful in giving you a slight edge. And I use this basically tool to show me these pullbacks. Show me these price action patterns. Here we go on the Eightcap account. Okay, it just basically shows me. I've got it set just for the sake of this video today, webinar today, that we're going to use the 5 minute and so forth. I don't normally trade the 5 minutes these days. I'm way too busy, unfortunately. In the previous life, yep, but not so much these days. We see a little setup like that. Just go to view and see if indeed it was a setup. This is a bullish pin bar. The trend is flat. There's nothing going on there, so I won't be taking that trade. So this is pinging me every 5 minutes as new patterns are found. Okay, well, there you go. There's one here. It's just pinged a few minutes ago while I've been on camera. Unfortunately, we've missed out on that one. That's okay. They had this bullish pin bar. So you had the pullback into the moving averages, puts in this pin, shows you that that was indeed a pullback and not a reversal, and off you go. So that one there, 17 pips up at the moment. I'm out of that. I'm not in the trade. I didn't take that trade, unfortunately, because I'm talking to you guys. But there you are. That's a nice little setup there. That was in the pound against the New Zealand. What about the Aussie New Zealand? Anything there? Okay, so here's an interesting one. Okay, so you had this pullback. Bullish pin bar. We haven't taken out the highs, so you wouldn't have been in this trade. This one, had you taken it in, you would have basically potentially been stopped out. You wouldn't have taken that anyway because of the higher time frame is down. So you want higher time frame confirmation. But there you go. So let's have a look here. Let's have a look at this. Anything here? This is the euro against the CAD. Okay, euro CAD. The higher time frame on the euro CAD is up. So I'm only taking sell trades, buy trades, bearish pin against the trend. You don't take that. Very simple strategy, isn't it? Very, very simple. Looking for these price patterns with the direction of the trend. Your entries are defined, your exits are defined, nothing to the imagination. We talked about Euro Oz a moment ago when we were looking at the momentum meter for potential bias. That on the 5-minute chart is pretty much doing nothing. So I ain't going to do that. Okay, here you've got a bearish pattern. In fact, you've got two bearish patterns back to back here, but the direction of this is up on the 1 hour. So for trend following, clearly I'm not selling. I'm only buying, so I wouldn't be taking this trade. However, having looked at that, there are a couple of patterns in there that could be a telltale sign of a reversal coming. You've got this bearish engulfer at the top. Then we take out this, almost take out the high, pretty much the same, and then close lower. If this breaks lower than 48, 49, sort of 80, or 20 pips lower, you could see this a reversal. Talking about that, I did say to you I had two strategies. The other strategy I do use is a reversal strategy, and we do that on the higher time frame chart, on the daily chart, looking for the exact patterns against the trend on the daily at key levels of support and resistance. I think I've been told to wrap this up soon for time restraints. But again, I have that strategy in my tool bag for reversals on the daily. Okay, so on that basis, you just select the daily chart, and we'll see if anything comes up. There we go. So I'm going to see if we have any patterns. So nothing overnight. Okay, if it had, it would have shown up a daily pattern. But that is a reversal strategy that we use for counter trend. So there's two strategies that I would generally trade: with the trend, counter trend. With the trade in the lower time frame charts, I look to see the momentum meter for the strong currencies against the weak currencies to get my edge. Look for those pullbacks, patterns, and trade accordingly. Get those levels plotted in on support and resistance on the daily to improve your win-loss ratio. I'm sure you won't be disappointed. Right, okay, folks. That is, God, it's flown by, isn't it? They told me only to be on for 20 minutes. Sorry about that. But hopefully you take something out of this. This is how I analyze. I've been doing this basically since 2005 when I came onto the screens. I used to work in the trading pits, as you can see with my trading jackets there. Spent 20 years in the trading pits, working for the big banks and myself. But since 2005, I've been trading electronically here on the screens. 2005, 2006, I can tell you now, I lost a ton of money, changed things around, got everything simple, pure price action, pretty much as we did in the trading pits. And that's what I encourage you to do as well. Keep it simple. Folks, I'll see you Wednesday. If you're only a Monday person and you're waiting for me for next Monday, I'll see you, but I'll be in my villa in Thailand. That's just looking forward to that. But still working. They say you can work for anywhere in the world. I will be working from my villa out in Thailand next Monday. But if you are tuning in, I'll see you Wednesday here as well. Thanks for tuning in. Have a good week.